Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 5th of August. We've had something of a cat amongst the pigeons towards the end of this week, whereas the main focus of interest had been on interest rates, and indeed the Federal Reserve implied that the first rate cut may still come in September. What had also been expected was that the US was heading for a soft landing in terms of the economy. But a couple of pieces of data, most notably the initial jobless claims and also the manufacturing data, which moved into contraction status, suggested that actually the US could be heading towards recessionary territory and that the Fed might have missed the boat. In addition to that, there were some tech earnings which were somewhat disappointing. Obviously, these are coming against a high bar of expectations. For example, Entain released its results and fell 20% in terms of the share price after the bell. All that being said, apart from those jitters, the indices do remain in positive territory for the year. They've had the cushion of a strong performance in earlier months. So in the year to date, the Dow remains up by 7.1%, the S&P 500 by 14.2%, the Nasdaq by 14.5%, and the FTSE 100 by 6.9%. So turning to next week, again, it's a fairly filled corporate agenda. We're going to be looking out for numbers from the likes of Legal & General, whose shares are fairly flat over the last year, down about 0.2% or so. That follows some disappointment in the short term after their capital markets day, although set against that, the chief executive did say that starting from next year, the company would be targeting £200 million for share buybacks per year, as well as 2% dividend growth. There's also going to be an update from Persimmon, the house builder. Shares up around 36% over the last year. Obviously, there's been a few tailwinds of late for the house building sector, not least of which is the new government's plans for house building across the country. On top of that, of course, we've had an interest rate cut this week, which could prompt some buyers into the market. So we'll be looking out for things like increased buying interest and indeed reservations over the important spring season, as well as the success of the incentives that the likes of Persimmon have been introducing to spur business. In the meantime, a dividend yield of 3.8% underpins that. Finally, in terms of the UK, there's going to be an update from Entain, the owner of Ladbrokes. Shares down 59% over the last year. There's a few things working against it here, not least of which its US joint venture with Bet, known as Bet MGM. Although it's getting nearer to profitability, it's had to spend a lot of money in retaining its market share, and the competition in the US, as you would imagine, is particularly intense. So market share is something that's been under the spotlight, as well as that investment in growth. It's likely to hit the bottom line, of course, and quite apart from that, there's always the threat of regulation overhanging the sector. Meanwhile, in the States, the brisk pace continues in terms of company reports, with updates from the likes of Caterpillar, Airbnb, Walt Disney and Super Micro Computer. Thank you for watching. Have a great week.